Ravneet Chowdhury, thank you for welcoming Investors Magazine here in Bank One. You are the CEO of Bank One since 2013. What have been your main achievements so far?
I think the key thing we've achieved is that we've positioned Bank One as a key player in the local market. We've also ramped up new products and started our private banking platform, which is amongst the top in the market today. We've also increased the visibility of the bank dramatically. We are a well known bank on the island now, and we've also started spreading the visibility of the bank internationally. We're a key player in Africa today. We're one of the few banks from Mauritius that genuinely understands Africa, does business in Africa, and actually has partnerships in Africa through INM Bank and the CL Group.
And what can you say on Bank One's performance for the first semester of 2019?
Well, I'm very pleased to report that we've had a very strong performance in the first semester. Our business has been good, our risk has been managed well, we are showing very strong growth, and I hope that we can report some good numbers to you by the end of the year.
Can we have some figures?
Well, I'm not able to share any figures with you right now, but you could look at our website and get the figures for the first half. It shows strong growth over the previous year. It shows good momentum, both on the top line and on the bottom line, and it shows that our risk has been very well managed. So if that trend continues, we should be able to report a very good year for 2019.
How is Bank One coping with the digital transformation of the banking industry, which is happening worldwide?
So I think that's a very topical issue at this point in time. And Bank One has a very exciting journey as far as the digital piece is concerned. We're making a lot of investments in our core infrastructure. We're ramping up our entire journey, customer journeys, and customer experience. And we hope to deliver a really good quality product on the digital side in the time to come. So I think it's all about enhancing the customer experience, reducing cost for the bank, and having information on a customer that can lead us to delight the customer. So that's basically the paradigm we are following to engage in our digital journey.
Okay. And what are the other challenges which the local banking sector is facing actually?
So, whilst GDP growth rates in Mauritius are at about 3.8%, we do find that the local economy is a little bit sluggish. We don't see too much of investment coming into the local economy. And that means there are lesser projects for us, banks like us, to engage in. We are seeing far more growth on the international banking side and less on the domestic side. We would like to see more foreign direct investment in the local economy so that can kickstart more businesses, provide more jobs, and give more investing opportunities to banks like us.
And there is a persistent issue in the banking industry right now. It's the excess liquidity in the system. What are your views on this issue?
So I think there is a structural imbalance in the economy where a lot of money is foreign exchange, especially, is coming into Mauritius, basically for property purchase. And whilst the central bank has done an excellent job in trying to mop up this excess liquidity, there's more and more coming. So the central bank is caught in a tight spot where, on one hand, they need to maintain a competitive exchange rate. They also are having to, deal with the problem of this excess liquidity in the system. They've done a great job to contain this liquidity. It used to be at 20 billion plus. It's down to about 10 billion now. And I think it's something that the central bank is looking at and managing well.
But some observers are saying that the excess liquidity results from, let's say, that banks are not taking sufficient risk.
I think that's not true. If you see the balance sheets of most banks, you will find that there is a growth on the asset side of the book. Unfortunately, that growth is led more by international business and less by local business, largely because there are lesser opportunities to lend in the local market. But it's not, the excess liquidity is clearly not a result of banks not lending enough.
Does it mean that the market is, let's say, around at the saturation point?
Not really. I think we are growing at a 3.8% GDP growth rate. I think to kickstart our economy, we need to push up growth rates for this economy. This economy needs to grow at more like 6 to 7% in order to kickstart and move us from a middle income to a higher income country. So I think there's a structural shift required in the economy.
And what about Africa?
So Africa has had amazing growth in the last few years. It slowed down a little bit because of the oil price situation and because of a general slowdown globally. But we believe Africa still presents a lot of potential, and there's a lot of opportunity in Africa. Ourselves, we do a lot of business in Africa, are well entrenched in Africa. We see a bright future for Africa. And sitting in Mauritius, we have a great opportunity to exploit this great continent with so many countries and with such a large population. And we are at the forefront of that opportunity right now.
Which countries, according to you, have more prospects in Africa?
So East Africa is clearly a bloc has done well and clearly has opportunity to do well in the future. In West Africa, there are certain countries that can do very well. So it's a mixed bloc. It all depends on how commodity prices move, how oil prices move, and it's all a question of good governance as well. In Rwanda, we see excellent growth and development because of great governance. So I think it's a mixed bag for Africa.
And last question, what is your outlook for 2020?
So 2020 is going to be a tough year from a global economic environment point of view. There are a lot of headwinds from a political point of view, from a social point of view, from an economic point of view. And trade war between the US and China is not helping things. The internal politics in the US and the Brexit situation is not helping things. Investors like certainty, they like stability, and unfortunately, globally, we are not able to provide investors that. That is coupled with the fact that asset markets have had a great run in the last 8 to 10 years, ever since the 2008 and 2009 financial crisis. There's been dramatic growth in the equity markets. The bond markets have done really well. It's possibly time for a correction. And I believe the political situation and the socioeconomic situation might lead to a correction in the financial markets before everything can start moving back up again. So 2020 might be the year that marks this turning point where there's a correction in the global economy, global financial markets, and we try and find a correction and a bottom before growth can start all over again.